Andrew Holland joins us, Chief Executive Officer, Investment and Advisory with Ambit Capital. Andrew, morning. Thank you for joining us. Andrew, characterize the market environment for us at a level of 5,000 plus on the Nifty and 17,000 plus on the Sensex. So what are you advising your clients?
We think there's going to be a good rally now. I mean, there's a very bold move by the RBI. Hopefully the government can be as bold as them going forward, and we'll get some of the so-called reforms come through. So, with the US looking as though it's continuing to tick over in terms of the recovery in the economy, fears which we had about Spain and Italy more recently looking as though they've abated as well. We could be for a strong summer rally now. And the old adage of selling May and go away, I don't think will work this year.
Andrew, Tata Motors as a trade, Tata Motor as an idea, is the trade now getting slightly crowded?
I think in the very short term, it could well be, but I think we came into the year, and last time we spoke, we were saying that interest rate sensitives is where we'd be putting our money, and that's where we have. And that obviously includes autos. So, Tata Motors is doing well. I would say that the sentiment for the stock will probably be knocked a little bit if you see kind of slower growth coming from China or any worries over China growth. So that's the only thing which could be a negative for the stock in the very short term. But certainly the auto stocks is the place you should be.
Andrew, I don't know if you've had the chance to look at HCL Technologies numbers, but an impressive set at that, and the stock price as well is reacting to it. Do you think, again, it is going to be a shift out of Infosys and perhaps move into, an HCL Technologies, a Hexaware from a mid-cap, or the market is definitely going to wait and watch what TCS has to do?
Yeah, no, the pecking order's been changing for some time, and obviously Infosys continues to be dogged by problems. We thought that the management were on top of that in the last quarter or so, but that doesn't seem to be the case. So the good news is that HCL Technologies is saying that all is not wrong in the sector, and I think it's going to be obviously a sentiment in terms of Infosys being weak in the short term, but it's really saying that the management can't get things back together. And if you go back over a number of years and look at the kind of the likes of, say, ITC or Hindustan Unilever, you had similar problems. You had analysts talking of D-ratings and it never getting back to the ratings it had. So I suspect that if anything, that the management at Infosys really will have to get back on top of their game to start bringing back confidence to investors going forward. So I wouldn't rule out Infosys yet, but obviously you're going to go where the growth is, and HCL Tech, and I'm sure TCS will continue to show that way. I think with the mid-cap IT, I really see more consolidation in this sector. So I think there's some very good cheap ratings out there, and the ones that we're liking are Tech Mahindra and Satyam, because the combination of that I think puts them into a different league, and the ratings don't really reflect that combined entity. So we're focusing a little bit lower than some of the large heavyweights at the moment, because we think that's where the action is going to be.
Is that a trend you expect will play out for rest of the year as well, Andrew, which is the big three IT names, they could underperform, but the next three, which is Wipro, Tech Mahindra, and to a large extent something like Patni, they have potential to outperform?
Yeah, I mean, I'm still not convinced on Wipro yet. I'd like to see more of the changes the management have been making, but we certainly think that the Tech Mahindra Satyam combine could be very interesting, and it could see a re-rating of the stock going forward. So that's where we're looking at, and more select on the mid-cap side, where you've got ratings, some of them in PEs below 10. So we think there's a rating kind of upgrade for the mid-caps if they're not taken over in between time.
So, Andrew, if you have to construct a portfolio for next 12 to 18 months, a portfolio which you think is capable of yielding a 25 to 30% return, what is the mix of mid and large cap you would like to buy in that portfolio?
No, obviously, it's going to be large cap because, mid caps, you've got to be, very, very stock selective. And, some of them are not as liquid as you would like. So, you have to be careful in terms of how you're going to manage that risk. But we would be certainly as we are now, in interest rate sensitive, such as banks and autos. As I mentioned last time, we're becoming more confident on the infrastructure sector, and we'll continue to pick up selectively stocks there. And shorter term, you could see a bit of a fillip for the oil marketing companies. I'm not a buyer on a long-term basis, but certainly short term, you could see that sector, have a good run. Hopefully, with the government taking some bold measures there on oil pricing, and then really look to some of the more mid caps, which I've mentioned in the kind of tech sector. But obviously, you've got other companies within, say, the auto ancillaries, which would be interesting as well. So I think you have to be stock selective, but we certainly be more large cap at the beginning throughout the summer rally rather than some of the mid caps at this stage.
Andrew, what's the expectation from HDFC? It's slated to be yet another steady 31% PAT growth quarter. Growth versus valuation, what would take beating and what would win?
We can talk about HDFC Bank and the ratings, and it's never been cheap, and it probably never will be cheap because they continue to deliver in good markets and bad markets in terms of profit performance. So you know what you get with HDFC, and it's a very good bank, and you can sleep at night. So it should always be part of your portfolio, always.
Andrew, last time when we interacted with you, on this forum, personally, you were buying fixed income products and you were advising your wife to buy gold. So what are you planning to buy for this fiscal, and what are you advising your wife to buy for this fiscal?
Well, no, my wife doesn't take my advice on gold. She actually just buys it herself. But she's looking more at the wine investment side of the portfolio now. So I'm continuing to keep with my fixed income, but we do have lots of mutual funds as well. What's
stopping you from investing in equities, and that one direct equities, because you do that for a living?
Yeah, no, I mean, there's obviously huge amounts of compliance rules that we have here, so there's a difference than that in terms of how we manage our funds as well. So it's restrictive, so it's not something that we like to do.